There's one stock that is about to break out, in my opinion. It's the Amazon of Africa, as it's called. The ticker is JMIA. And the revenue of Q2 was massive, leading to a huge jump in the stock price. Cash burn also halved. So those numbers combined created this rocket ship. Why buy it now? Well, it started to digest and it looks like it's going to go up. We can take a look at the chart, but for people who don't like charts, we'll also jump into what does it mean to be the Amazon of Africa, and why, as someone who's investing in the US stock market, do you want to invest in this company? If you haven't hit that subscribe button, hit that button, and let's get going.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here is the chart on this dark horse stock candidate. So if we zoom out, this thing has just gone down from the peak of 70, and in the past year we can see that, well, basically just barely gone up. This was a little over a year ago, and now we're reaching this sort of high. So this number is going to be super relevant, 15.5. So this is like basically a penny stock. It's just over $10. However, there's a ton of volume, and for almost everyone watching this, this is still a great opportunity because a lot of big accounts are not able to play this. Now, that also comes with its trade-offs, because you want big accounts because you want a lot of people to be able to see the same breakouts that you're seeing. But it does follow that characteristic that we've sort of seen, even to a greater degree, up 30%, down 15, up 30, down 15. So it looks like we have another up 30, down 15, tested this moving average, and then we're building up. We'll go into exactly, the numbers and where to buy it and all that, but do want to satisfy people who want to know what's going on here. And here's the financial performance. So Q2 revenue was up 25% year over year, and up maybe 15% from Q1, and the cash burn was basically cut in almost half. So that's the big story here. This is how much merchandise was sold on their platform. It's not a lot, right? I mean, compared to like Amazon or TikTok, but compared to every other company that's trying to do e-commerce, this is a lot, especially for a country that's not the US, okay? Not that Africa's a country, you get what I'm saying here. So let's take a look a little bit at what this company is. There aren't really similar tickers, which may not come as a surprise, but let's get situated here. Jumia Technologies is the company. And look, they're not break even yet, but think about Amazon took 20 years, okay? So this is the big story, the 25% year over year increase, and GMV rising as well. I don't think it's just that these surpassed the analyst expectations. I think it's also the cash burn we saw. A couple other pieces of info. Not working in South Africa is, slightly eyebrow raising, because you got to think there's a lot of people spending money there. But if this is, their prime markets, then so be it. So Morocco as well is, it's already spoken to up there, but big sort of, it's on the ocean, okay? So this makes sense, an e-commerce company operating on the ocean. Don't really need to focus too much on this kind of stuff in terms of investing, but it's always nice that they are projecting a investor-friendly image. So this is awesome. Okay, but look, here is what we're trying to figure out is, are they actually the Amazon of Africa? That's what everyone's trying to figure out, because of course, if Alibaba is the Amazon of China, that's very investable. And Kathy Wood just bought Alibaba, actually, and we can sort of see that this stock movement has been insane, okay, since Q2 earnings in very similar fashion, 50%. So it kind of makes sense why JMIA would go up, well, more than 50%. It's a penny stock, so it actually went up 150%. But we're sort of seeing the story here of these similar to Amazon type companies. But it sounds like this is their competitor that may be driving them out of the South African market, and that is a challenge. There's another company as well in Nigeria, which I think is a big populous country. And then there are some, well, can't imagine this is that big a competitor if they're headquartered in Hong Kong. But if phones are a big portion of their GMV, gross merchandise value, then I guess it could be a competitor. And then another South African company. So I'm not going to pretend I know what these companies are really doing or who is their main competitor, but it sounds like if they can't get into South Africa, that could be a challenge, and people are definitely going after the South African market because that's where there's a lot of opportunity to get customers. So look, this is another risk factor, I suppose. 25% year-over-year decline in revenue in Q1 2024. So that was a while ago, but if we look at that, this is basically what the stock did over here. Q1 earnings would have been here. Yeah, no, this would have been, that doesn't make sense. That would have been what? Q4 earnings, 2023? Yeah, this is Q4 earnings of 2023. This would have been Q1. But pretty much this stock has gone up on earnings. I mean, it's obviously, this is Q2, this is Q3 2024, this is Q4 2024. I'm not sure about this piece of information, but the bottom line, which they are effectively pointing out, is this revenue move is not sustainable. So they are going to have earnings in November. So that's enough away where you don't want to buy a stock into earnings. You don't want to hold a stock in earnings. You don't want to short a stock in earnings. So if you're going to buy this, you are looking for those sort of 3-day bursts that we're sort of talking about to sell half your position. So you sell half, you hold a little bit, you sell half, you hold. If it comes back, you have to sell it, or you just keep holding for it to continue to go up. And maybe you get a situation like, let's see if I can think of a new one here. Well, like Netflix on a 3-year chart, you know. Right after this earnings here, Q1 earnings, sell half 10% off, then you just trail the rest, and you would have just held it all the way. Even if you sold here, you make another 10-15% depending on where you sold your first half. And you have such a small position, or it doesn't really matter. So that's sort of the name of the game. Of course, if you have a big position, you get shaken out anyway, so you can't take big positions of these stocks. Maybe you take an amount where you lose, 1% on your portfolio if you get stopped out at a maximum. So maybe you take a 10% of your portfolio position per stock at a maximum. You do you. I'm just trying to give some benchmarks here. So don't really need to look into this company too much because it's a penny stock, but all stocks pretty much go down at their IPO these days. I mean, Figma, even though it popped recently, it still went down. CoreWeave popped, and then sort of has been going up and down. And you can't look at OTC stocks because they're so thin, so we can't really look at that price action as a comparison. So all in all, this is basically why you don't do fundamental analysis on a penny stock. But what you do is you look at the price action. You say there's plenty of volume for people. This is $100 million traded here who have less than 10 million that they're trying to get into this at a max, which is, a lot of people, a lot of different investors who might put less than 10 million in this stock. So that's why it's on the list. Really more like 1 million would be more reasonable as a max to put in, 1 to 2 million. But all that to say, the smaller you are, the more agile you can be. And look at this line. Finally, we're getting to the levels here. This $12 hold dollar level is extremely powerful to have a whole dollar level, because a lot of people are going to think about that and sell or buy there. And then there's a lot of resistance. This is actually a while ago, more than a year ago, all-time high of 15 whole dollar level, pretty much 1504. This level is 13-ish, so that's pretty much what we're talking about here. We don't really have to look back here. This volume is pictured here, but again, these people would have likely sold down to here. It's unlikely there's many holding here. Typically, if this were here and then it went back up, they might sell. Bag holders might sell into that, and then it would go down. But because it's more than 6 months away, that's unlikely to happen. So all that to say, if it gets over 12, you can use 12 as support. If it gets over 13, you can look for that 15 level as a blue skies. So, if it gets over here, it's to all-time highs. Well, not all-time highs, but whatever it is, 76 week, 52 times 3, 156 week highs, 3-year highs. All right, we're going to go too detailed here with all the numbers and all the weeks and all that, but you get in, you risk 20 cents, 50 cents maybe, and you try to make a few dollars. If you risk 25 cents, you try to make $2.50 up to here, or $5. That's the play. That's what we're talking about. If you like these stock ideas, this one is definitely off the beaten path stock idea, but it's setting up very well technically. Typically when a stock sets up technically, it's exemplifying a balance of supply and demand, which means when there's more demand than supply, you're going to see an explosive move, which is the whole subject of this video. If you like these ideas, if you like a very curated selection of these ideas, in other words, if you just want the best one, head over to stockscommunity.com. I am in there providing what I think is the best one each morning. This video might come out at a later date, so this might not be as helpful as being in there. You can also ask questions in there. You could ask questions in YouTube comments, but I might not see them. I might see them super late. Of course, as this community grows, it's very new right now, but as it grows, there will be more and more voices providing more info that you can sort of get your bearings as far as what other people will say as well as me. But the benefit of being so new is you get to ask your questions directly. So if that's a benefit you're interested in, head over to stockscommunity.com. Try it out for $25 for 7 days. Hit that subscribe button if you haven't yet, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.